This program was first broadcast on Canterbury's access media station, Plains FM, and was made with the assistance of New Zealand On Air.
Welcome to your weekly dose of the Accountology Show. I'm your host and chartered accountant, Nicole Haig, with an insatiable curiosity for uncovering accounting ideas to help businesses grow. I have so many nuggets of gold to share. Are you ready to make your good business great? Let's get stuck right in. Hey, it's Nicole Haig, welcoming you to the very first episode of the Accountology Show. So I've found that over numerous years of working intimately with business owners, there's a common theme. Business owners seem to go into business because they're good at what they do, not necessarily having the same flair with crunching numbers, running a business, or understanding the fundamentals of their finances and strategies that align with their personal goals and aspirations. And you know what? That's okay, because not everyone's a fan of business school. This show is based on the premise that business owners could all do with a little accountology in their life. And this is a platform to provide business nuggets of gold where we share golden insights, proven tools, actionable tips, candid interviews with business owners, and real stories of things that we're seeing in the business community, providing valuable insight into how to understand your business and what levers you can pull to make your good business great. But why the name Accountology? Well, a word with the suffix ology refers to the study of something, and accounting by definition, as per the Oxford Dictionary, is the process of work of keeping financial accounts. Therefore, as a business owner, this will be your place of learning without all the accounting terms and lingo. We want to break down those barriers and make this easy to understand and digest, fun and light-hearted, and sometimes controversial, to provide a different perspective and challenge the status quo. That is the advantage of what we do with our clients when we provide business advisory services, to give them an independent and objective perspective. We're not financially or emotionally invested in their business, and really put a different spin on the way a client is looking at a problem. Really push them outside their comfort zone. And that's where all the magic and growth happens. And this show is designed to provide the same to you. So I've been a chartered accountant for over 25 years and have been in my own practice for 20 years now. So there's a wealth of knowledge over here at the Accountology Show. Whether you're a seasoned entrepreneur, an aspirational business owner, or someone looking to take control of your financial destiny, this show is something for everyone. Each episode promises at least one aha moment to revolutionize your entrepreneurial mindset. Right, that's enough about me. Let's get stuck right in. Are you a business owner struggling with profit, cash flow, or to find balance between work and life? At Nicole Haig & Associates, we want to help business owners just like you reclaim your freedom. Freedom to spend quality time with loved ones, freedom from stress, and freedom from financial burdens. But how do we do it? It's simple. We listen, we understand, and we create bespoke, structured programs tailored to your unique business and personal goals. With the right education, coaching, and expert advice, we'll show you how to increase profits, improve cash flow, and align your business and personal goals. Don't do it alone. Let NH+A be your guide to success. Work smarter, not harder, with our proven accountability methods. Your freedom starts here. Contact us today. So it's the start of the financial year, 2025, and for most businesses in New Zealand, they'll have a March balance date, meaning the financial year is from the 1st of April 2024 to the 31st of March 2025. However, if you're a farmer listening to this, you generally have a June balance date. So I'm going to talk generically more around the March balance date. It's also a great time of year to reflect on your prior year, assess your business's financial health, and plan for any of your tax obligations, and consider some strategies for the 2025 financial year. And of course, it goes without saying that it is super important to engage with an accountant for professional advice. But now you need to prepare your annual financial statements for the year ended 31st of March 2024. You're looking backwards. And hopefully you already know what your numbers are and you already know where you're sitting in terms of your margins or your net profit. But if you don't panic. We'll cover this in future episodes. So let's look at the process you'll go through with your accountant for the preparation of your annual financial statements for the year ended 31st of March 2024. And just as an aside, and to avoid confusion, I use the term annual financial statements and annual accounts interchangeably. I'm also a huge fan of Xero, and all our clients are on Xero. There are obviously other accounting packages out there, such as MYOB or QuickBooks or Spreadsheet or, God forbid, a manual cash book. But Xero is where it's at for all of us, and I'll often refer to Xero. But again, this is generally interchangeable for your accounting software. Okay, so I want to tell you a couple of things to think about when it comes to getting ready for your accountant that will make the whole process a lot more efficient and smoother. Accountants hear a lot, oh, but it's only the push of a button and voila, the accounts are produced. No, if it was that easy, everyone would be producing their own annual accounts and tax returns, right? So let me explain. Firstly, you will receive what we accountants refer to as your annual questionnaire, which is a list of questions which we encourage you to think about what's been going on in your business and what you need to gather up and send in. So things like your Xero profit and loss and balance sheet, have a look at it. Is this accurate in terms of the debtors? So debtors are money that's owed to you, or another term that you might hear is accounts receivable. Have you invoiced everything out as at the 31st of March? Or your creditors. So your creditors is money that is owed to you, or another term is accounts payable. Have all your bills been included in your accounting software, and are they at the correct date? Are they put in at the 31st of March and not the 1st of April, for instance? Are there any credit notes that you need to apply, or is there anything missing? And have you checked for bad debts? Now, these do need to be written off before the end of the financial year to be included in the 2024 annual accounts. So if you missed the cutoff, still go back and tidy them up for this financial year, or get a debt collector onto it if you haven't already. What about stock take as at the 31st of March? Make sure you have conducted a physical stock take and compare it to your inventory system. And if these don't match, that suggests that something's going on. So you need to investigate any inconsistencies, as there could be theft or human error or fraud or damage. And consider what obsolete or old stock could be discounted. Remember, the higher your stock levels, the higher your profit. So double check to ensure that your stock on hand looks correct. Your bank and loan statements, so you need to upload these for each bank or loan account to support the balance as at the 31st of March 2024, and that's imperative. So upload these into Xero files and you will be one step ahead of everyone else. Your accountant will be able to access it from there, as will you when you need to gather everything for your accountant. You'll need to gather all your bank statements as at the 31st of March to confirm the closing balance as well as the loan statements. But you're asking, why do we need all of this? Well, it's certainly not because we're being nosy. Here's why. We need to make sure that every item on your balance sheet has the correct closing balance and that there's a work paper to support this, including we need to complete a GST reconciliation to ensure that the amount that you've paid matches what you have paid and what is recorded at the IRD. We also have to prepare imputation credits. That can be relatively complex to get your head around, so you don't need to worry about it, and that's really for your accountant. But we do all of that boring stuff. A work paper that I refer to is essentially an external document. It's generally not from Xero or from your accounting software, and it proves that the balance is in fact correct. Then once the accounts are prepared, your accountant reviews it all and ensures it's accurate before signing it off. So just know that your accountant is doing a lot of work to get those accounts ready for you, and it's not simply clicking a couple of buttons. It also means that by providing these documents to your accountant, that we are claiming as much as we legally can for you. So if you're being asked for these documents by your accountant, as frustrating as it may be, know that we've put some thought into what's being asked of you and can assess the position for tax purposes for you based upon this information. We are also essentially getting a file together so that if the tax man comes a knocking, we can serve them a whole heap of paperwork to support your tax position. That's some great business risk management right there. And please make sure you hand everything over to your accountant in one go. If they have to start your job, then realise that information is missing, have to put the job down, ask you for more information, waiting for you to send it back, then it's a couple of weeks later that you get it to them, they have to get their head in the game again and start all over. So it's far more efficient for everyone, including you, if all your documents have been forwarded in one go. And if your accountant does ask questions, please answer them within 48 hours. The quicker you reply, the quicker you'll get your annual accounts back. And then, of course, don't get me started on clients who do this. They give information in spits and spurts, then they ring and say, how far away are our annual accounts? We urgently need them as I need some funding from the bank, and the bank needs them. By the way, did I say urgently? Anyway, then the accountant is the bad guy. Please have the courtesy for your accountant, and if nothing else from today's show, please complete the entire questionnaire, forward all the required documents for them in one seamless process. A really good tip is, in your Xero, under Files, upload documents during the year as they come in. Then they're sitting there for your accountant, or conversely makes it easier for you to upload to your accountant. And make this best practice for your business. Then everyone can easily see any of the important documents, whether it's sale and purchase agreements, lease agreements, bills, etc. And you want another tip? Run your balance sheet and profit and loss report from your accounting software package, and do take a look at it. Have a look at it and see, does it look correct? Do the balances on the balance sheet make sense to you? On the P&L, does your sales look right for the year? What about your gross profit margin? Is this in line with previous years? And what about your net profit? Does it all sound about right? If you're unsure, add in your comparative figures. So they are last year's numbers, and see how they compare. And if in doubt, well, I think this is a fantastic time to invest in yourself and sit down with your accountant and start to go through what your numbers are telling you and what looks normal for you. So at least you've got a benchmark to compare against. Running a business, as we all know, is a demanding job, so it's no wonder business owners lose track of crucial things at tax time. So here are some legal ways to decrease your tax bill. Entertainment. So you might be looking at this cost and going, oh golly, did I really spend that much on entertainment? But remember that entertainment is generally only 50% deductible. There's a few if, buts and maybes in there to make it 100%, such as food and beverage, costs associated with a 4-hour conference. Dinner and lunch meetings with clients and customers are partially tax deductible. So keep your receipts and check in with your accountant to see which meetings can be deducted. But bear in mind that the treatment of meal expenses included by self-employed people differs from a meal allowance given to employees. They're not the same thing, so don't get them confused. Anyway, I could do an entire show on entertainment alone, but your accountant would deal with this, and you don't need to do anything other than know that for income tax purposes, the figure that's in your P&L for entertainment will most likely be split in half between deductible and non-deductible entertainment. If you do, however, want to know more in the meantime, head over to the IRD's website and they have a great entertainment guide. Use of home office. So, do you have an office at home, or do you park your work vehicle in the home garage? A business owner who uses part of their home as a home office to further conduct business may be entitled to a deduction for the part of the outgoings that relate to the use of the home for the work-related activity. So basically this means that you can include a portion of the running costs of your home, such as your home power, your rates, insurance, interest on your home mortgage or rent, house and contents insurance, and maybe some repairs and maintenance. How this portion is derived, it's based upon the ratio of the total area used for the income-earning activity, such as the office or garage, over the total area of the house. Most accountants will ask for this information from their clients when they complete their year-end accounts. Ensure that your home office expenses have been provided to your accountant so you can claim this additional tax deductibility. So it's worth providing this information to your accountant, right? Which will assist with bringing your tax down. And if for whatever reason they don't ask for it, we've actually got a template that you can use. Just email us. The email will be in the show notes, nicole@nh-a.co.nz, and we'll send it through to you. So then you can send it to your accountant. What about subscriptions and memberships? So if keeping up with your industry via specialist magazines or newspapers helps you to work, you're eligible for a tax deduction on these subscriptions. We're also globally becoming a subscription-based world. Virtually everything now is subscription-based. One thing that we are seeing is that it is very easy to sign up for subscriptions, and it automatically comes out of your bank account or your credit card monthly or even annually. And if you're not keeping an eye on it, you can forget about it, not use the service, and still be paying for it. So we recommend to clients that this is a great time to look through your subscription costs and check if you are still using what you're paying for. Otherwise, unsubscribe and stop the payments. You could save yourself a fortune. Okay, so another area is assets and repairs and maintenance and low value assets. So this is a common one that is miscoded by clients. So let's start with low value assets. A business can claim 100% deduction for low value assets in New Zealand. So what this means is when an asset is purchased for $1,000 plus GST or less, which is the current low value asset threshold, the entire cost can be deducted in the year that it was purchased. So that's great for tax purposes. And we call this expensing the cost. So for example, if a business buys a printer for $950, that would be fully tax deductible in the year the printer was purchased. But what if the asset's over $1,000 plus GST, right? Well, then the asset needs to be added to your balance sheet as a fixed asset and it's depreciated. This means that the IRD determine how long the asset will last and say that you can write it off over the lifetime of the asset. And we call this capitalising the asset. So let's look at an example. So if you bought a $2,000 laptop for your business, this would be capitalised as it's over the low value asset threshold of $1,000. It would be added to your fixed asset schedule and depreciated at 50% per year because the IRD has determined the depreciation rate. So the cost of the laptop being $2,000 cannot be claimed as a tax deductible expense and used to decrease your tax position, but the depreciation component can be. So in this case, let's assume you bought the laptop on the 1st of April, so that's the start of the financial year. You've owned it for the entire 12 months. Depreciation for the full year would be $1,000. That $1,000 is tax deductible. So examples of low value assets could include office equipment, such as printers, scanners, and small appliances, furnitures like office chairs, desks, and filing cabinets, computer equipment, such as your keyboards, a mouse, monitors. It could be tools and equipment and minor repairs like a drill, mobile phones, and other small electronic devices. One thing to be aware of, though, is if you say let's just say you went to Office Max and bought an office chair for $250, you bought a desk for $500, and you bought a large printer for $950, and it was all on the same invoice. Although each individual asset is below $1,000, the total invoice is $1,700. So that is over the $1,000 threshold. For the low value asset threshold to be applicable, it refers to per invoice, not per asset. So to get around this, all the assets would need to be below $1,000 and on a separate invoice. Purchasing your low value assets needs to be before the end of the financial year, obviously, and maybe a legal way to bring down your tax bill. So if you bought a low value asset today for your business, that would fall into the 2025 financial year, but you can't go back and add that to the 2024 financial year. Just planning ahead when it comes to the end of the financial year for 2025, ask yourself the question in March next year, are there any low value assets that you know you'll need to buy soon, and buy them in March? It's just a wee end of year strategy. Make a note of it. Be careful though that it doesn't upset your cash flow. Don't just go and buy something for a tax deduction, especially if cash is tight. And make sure you check with your accountant for specifics, as this is not specific tax advice and of a general nature without understanding your intentions or certain circumstances. So what about repairs and maintenance? So anything you've coded to repairs and maintenance, have a quick look at. So you can do this by looking at your account transactions report in Xero, and you can add the code repairs and maintenance for the financial year. Have a look at each transaction and see if there's anything that's over $1,000. Is this strictly a repair or is it actually a new asset? So how do you know the difference? Very quickly, if the cost of the repair makes the original asset you are buying or repairing better, then this should be capitalised. So if you're replacing like for like, then this can be expensed and can be a tax-deductible expense in the year that the cost was incurred. Okay, let's use an example. So let's say a business owner who has a rental property and the tenant burns a hole in the Formica benchtop. And over time, this has progressively got worse. The Formica benchtop was replaced with a stone benchtop. Because the stone benchtop is better than the Formica, this is not a repair for tax purposes, but rather it should be capitalised and added to the business's balance sheet as a fixed asset. If, however, the business owner replaces the Formica with another Formica benchtop, then this is like for like and it can be expensed. So that gets added to repairs and maintenance on the profit and loss and becomes a tax-deductible expense. A good tip is also to make sure you add the invoices to the Xero transaction so your accountant can clearly see what it's for, and then they can make the judgment call as to what should happen, whether it should be expensed or capitalised. And once again, remember to check in with your accountant on this because this isn't specific tax advice. If you want to know more, we have got an end of tax year checklist free to download from our website, which has got 12 points to stay ahead on tax and take care of your essential housekeeping. So I'll put the link in the show notes. Okay, a couple of other things that you might have forgotten about. Cryptocurrency. A small few of you out there have purchased cryptocurrency. You need to let your accountant know about this just in case there could potentially be some tax implications. And if you've earned over $180,000 for the year in your personal name, you might have extra tax to pay. So make sure that you've been aware of that and keeping on top of it. Keeping records is really important. So having your Xero clean and tidy with supporting documents will keep your accountant's questions to a minimum, allowing them to prepare your annual financial accounts more effectively and efficiently. So when it comes to records and receipts, keep everything. Add them into Xero, use your Xero Expenses app. This is an amazing app that allows you to take photos of your receipts or invoices from your phone and it will code it for you. Add it into your Xero. So when it sees the Xero transaction, it will match it and reconcile it. Amazing. Your accountant will love you for it. So I hope that has been helpful. And like I said, there's some resources on our website which you can go over and grab. Action points for you listeners. The first thing is to start to get all your end of year documents ready for your accountant and start to upload them into Xero and files. The second one is go through your profit and loss and balance sheet as at March 2024 and make sure it looks right. And complete the full annual questionnaire sent to you from your accountant to make the preparation of the annual accounts and tax return seamless this year. And I promised there'd be an aha moment, but one that I think you should take away from this conversation is complete every question on the annual questionnaire from your accountant and hand everything over to them in one go. Picking up and putting down your file is inefficient for everyone. And remember to answer their queries within 48 hours. The quicker you reply, the quicker you'll get your annual accounts. Here's to a prosperous, successful and abundant 2025 financial year. Thanks for joining us on the Accountology Show. If you have enjoyed today's show, you're in luck because we'll be back next week. You'll find past episodes at plainsfm.org.nz and subscribe on Apple Podcasts or Spotify to never miss an episode. We would love it if you would leave a 5-star review and tell a friend or business owner who would benefit from hearing our show. We also love hearing from you, so reach out with any comments or a topic you'd like covered, and even suggestions for whom we should get in the studio next for an interview. You can find us on Facebook, Instagram, LinkedIn, and TikTok. Our handle is NH Plus Associates, that's NHPLUS Associates, or email me, nicole@nh-a.co.nz. But most importantly, thank you for taking the time to listen to the show. Until next time, keep building that business into the empire it absolutely deserves to be.